We are going to see very few auctions taking place today. If people are going to auction, they are tending to do them either through online programs or over the phone. We have seen quite a switch by the industry during the week, so I don't think it was unexpected. Auctions do attract crowds. You know, we know open for inspections also attract crowds. Definitely not a safe place for people to be in, not a safe place for, you know, to look around at property. So at this stage, the auction market will most impact places where a lot of auctions take place. Melbourne, around 30% of properties are sold via auction. If we have a look around the rest of Australia, it is actually a relatively low proportion. So, so not much of an impact nationally. The bigger impact will be open for inspection. So at this stage, you can still do private open for inspections, but obviously that could change any time.
Now, a lot of nervous people for so many reasons around the world, but let's look at the real estate market and those that own properties and rent them out, those renting properties. Now, both sides very nervous. We've seen some murmurings in the community, some comments from government. How do you see this whole situation?
There is a lot of distress emerging in the rental market and also the leasing market as well. So if we have a look at the rental market, the early job loss has been people in jobs like hospitality, entertainment. That industry does attract a lot more younger people. It tends to be lower income. If we have a look at who primarily rents, it is young people and it is people on lower incomes. So those people have gone from having you know, a steady income to virtually no income. They're probably on job seeker, so they may have some income coming in. And then on the other side, we do have big problems for owners as well. So for the residential market, a lot of owners are mum and dad investors. Pretty much most owners are mum and dad investors. They've also lost an income in terms of rental potentially, but they themselves might be in financial distress. They may have lost jobs as well. So very, very tough times in residential for residential rental. On the commercial side, we've seen very clearly this week that shopping centre owners are really under pressure, that a lot of retailers are either going under or they're stopping business. We saw the announcement today that Myer would stop opening immediately, stepping down 10,000 staff. Again, more problems for the rental market, but also problems for landlords as well.
What about for the property market? We've seen things written during the week that the market across Australia, and of course that takes the whole country into perspective, could drop by 20%. What are your thoughts, and which areas could maybe profit and which areas are really at risk of copping like a bad hit here?
Look, it's highly theoretical at this stage. I mean, we've got no idea. I mean, we've seen some forecasters come out with 15 different scenarios. So, you know, it's virtually impossible to predict exactly what the eventual hit on pricing will be. If we have a look at previous downturns, if you go back to the early 90s, we did see Melbourne hit the most. So Melbourne saw big drops in pricing. Correspondingly, the Gold Coast actually picked up and saw some quite strong price growth. In the other big downturn, the global financial crisis, we did see Sydney's premium suburbs do quite badly as a result of job loss in the finance sector. This time around, I think there'll be a number of variables that we need to consider. The first one is around tourism, so anywhere that does have a high reliance on tourism will be impacted. If we have a look at education, is another one. We do have some states, New South Wales and Victoria in particular, that are very reliant on foreign students. We don't know exactly what will happen to them over the next 12 months. And then we have the mining sector, which does continue to do quite well. So WA is potentially going to fare a little bit better than some other markets if those mining exports continue, which at this stage do seem to be going quite well.